Here are 5 mistakes to avoid after your mortgage pre-approval. It may seem obvious to keep paying your bills during the time between your mortgage pre-approval and the closing on your new home, but some people get a little excited during the process and neglect their finances. So tip number 1, keep paying your bills. Tip number 2, don't apply for new credit. Your pre-approval is like a snapshot in time, so you don't want anything to change, so don't apply for any new credit. Tip number 3, don't make any major purchases. If you buy new furniture or appliances with credit, your lender will need to factor in the payments to your debt-to-income ratio. And if you pay cash, you may deplete your cash reserves. I remember a lender talking about a young woman who was buying her first home, and she was all set to close when she decided to take advantage of a furniture sale. You know the kind, buy now and pay later. But it changed her debt-to-income ratio, and so she couldn't qualify for her loan anymore. She was unable to purchase her new home, and that is just very sad. So don't let that happen to you. Here's tip number 4. Don't pay off all your debt. I know, that sounds counterintuitive, doesn't it? But here's the thing. It can hurt you if you pay off your debt and close out an account or deplete your cash reserves. So talk to your lender before you do something like that. Okay, here's tip number 5. Don't change jobs. So if you can avoid it, don't change your employer. If you do, your lender is most likely going to need to see at least 2 pay stubs to verify your new salary, which can delay your closing. So these are just a few things to keep in mind between the time of your pre-approval and the closing of your new home. One more item, your lender will run your credit just before closing, so do your best to make sure that everything is the same as it was when you first got your pre-approval. I'm Rosalind Hoyt from Carson City, Nevada, and yes, I'm a realtor.